putting the recording on. If you don't mind dropping the slides, that would be great. For people who don't know, it's Dr. Temilola Adeyemi. She is at Money Africa, and Money Africa is one of the financial education companies on the continent. I'm a big fan, but instead of me, trying to describe who Dr. Temilola is, Temilola, how do you describe yourself? Like instead of me trying to do an intro, if somebody asks, introduce yourself, how do you go about it?
Thank you so much, Joe. And thanks to everyone at HAQ. Thanks for having me once again. I feel so happy and delighted to actually be among the, the power shakers, the movers of, of our economy. Anytime I have the opportunity of being among either tech people or investors, I'm always actually very delighted, because you all seems to be like the hope of the present, let me just say Africa in a way. Because a lot of things are happening, and I hope are just with you. All right, so thank you so much. I'm glad to be here. Again, my name is Temilola Adeyemi, and just like Joe already said, I work with Money Africa as a senior associate advisor, but I consider myself an investment professional and a financial advisor. So one thing that actually makes me unique, maybe I should brag a bit about myself, just like they have been putting DR in my name. Of course, don't let me go down to the root of saying all my life has actually been in finance, from BSc to 2 masters, and now I have my PhD degree in finance. So I've always been very passionate about the finance space, and not just in terms of, finance is very, very broad. So you could actually be a financial analyst, a corporate financial analyst, and investment analyst. Is a very, very broad space. But I've discovered that I thrive more understanding what the local market, the foreign market is, and helping people use that information to be able to diversify their investment into different opportunities. And I also, it actually have to do with my own background and my upbringing, because my father, he was a consultant in engineering space. He lacked that financial advisory power, so he made a lot of wrong decision, in terms of finance. So that actually is why I love it to actually help people thrive in their financial goals anytime I have the opportunity. Over time, I've been able to actually manage about 1 billion naira portfolio, directing people into how should you invest so that you don't put yourself under unnecessary stress, and also maximizing your return. So anything finance, you can give me minutes, you can give me hours on it, and I'm actually going to blow you off. So in summary, that's just about me. Thank you.
Thank you, Doctor. What I wanted to also ask is, like, before we go into all the other questions, can you tell us a little bit about Money Africa and LADA?
All right. So Money Africa is the first financial literacy platform, not just in Nigeria, of course, in Africa. And actually, it starts from the goal of, the love of the founder as well, and the person of Oluwatosin Olasende. Our own experience also made her realize that she worked so hard, but she wasn't able to save or invest anything. Then she discovered that when she started, making inquiries about why are people not investing, why are people not saving as much as they should in preparation for retirement, she discovered that there was a very big gap, which is financial illiteracy. So quite a number of people think unless you have like thousands of dollars or millions of naira, you cannot actually get into the investment space. And a lot of people don't even know, when you're talking about stocks, you're talking about bonds, you just go over your head and say, I don't know what they are talking about. So what we try to do is to ensure that we break all of these terms down in a way that it is relatable, so that you are able to use the information we provide you in terms of how you can invest, in different financial opportunities, from stocks to bonds to mutual fund to commercial paper, understanding what it means to plan for your retirement, understanding what it means to plan for your children's education, tax planning, anything surrounding financial literacy. That is what Money Africa is all about. And of course, we discovered that quite a number of people, despite learning all of this, they still have another big gap. Like, okay, thanks for all of these educational resources, but we don't still know where to start. And that was what actually prompted LADA. So we introduced LADA into the market, so that all that you've learned, you can actually start with us. We have taught you how to plan for your goals, your short-term goals, your mid-term goals, your long-term goals. How do you ensure that you're able to stick to plan? That was what we actually created Ladder, so that from Ladder you can be able to either save for the short term or invest for the long term. Thank you.
I love it. Now I'm going to deviate a little bit from the questions that I sent to you, because there was at least 5 questions from the audience, and I think the easiest one is like, what is the best way for a beginner investor to start? Like, where do you start from? How much do you need? Like, now I have a job, I'm finally making some money, and now let's say I have, let's say $5,000, which is quite a significant amount of money. Like, where do you start? Especially like for people who are in Africa, people who are in Nigeria, like, what next?
Honestly, if you are just starting, there are things that you need to do as a beginner investor. Especially right now, I know if I don't know if all the people that are here, if we are all Nigerians or we still have some people from other African countries. Please help me check that. Are everyone on the call Nigerians? Are we all Nigerians?
So I'm
Or
gonna
we have other countries?
I've enabled the messages, so people who are like, just people can add in the comments where they're from. I know one person on this call is from Tanzania,
Okay.
but people can just write in the chat where they're dialing it from.
Nigeria. Awesome. Awesome. So I just feel that maybe 80% of people that are on this call, they're actually Nigerians. And what that simply means, okay, I actually wanted to share maybe good news with you also, or maybe also bring you to reality of what is happening presently in the country. Of course, NGS just crossed 100,000 mark points. That has not happened in a very long time. Like,
okay,
literally.
I'm gonna stop you. What is NGX?
Oh, sorry. That is our Nigeria Stock Exchange, right? That's
Okay,
Nigeria Stock
okay.
Exchange. So we just crossed an all-the-time high point. And that's because we have quite a number of companies that they also cross their own, they also cross their own big market cap. Like Dangote Cement crossed 10 trillion naira market cap. Market cap means market size, the entire size of the of Dangote. Assets also, because they are acquiring ARM. ARM is, one of those pension companies in Nigeria. They also crossed 1 trillion naira. When all of this happened, it boosted the market, and of course, NGX has just been doing so amazing. Now, if anyone is carried away, and honestly, I was sharing somewhere that Dangote Cement, as at the beginning of this year, we had bought the shares from it maybe on 2nd of January. You must have bought that maybe 316 or 319. As we speak, Dangote Cement as of yesterday when I was checking the market, Dangote Cement was already on 620. So that simply means is that if you had invested on 2nd of January, you have literally doubled your investment. So now, if I start sharing news like this, you'll be like, wow, Temi, okay, give me more hands up. What are the stocks I should be looking out for to want to invest in? But then, as a beginner investor, it's very costly for you to want to, speculate or maybe time the market. The market cannot be timed. And that is why number one thing you must do is to educate yourself. You even have to learn about this market itself. We have not been hearing this buzz about the NGX for a very long time because the market itself was not encouraging. Although there are a lot of things that are contributing to that space right now. So you must understand what are the things that you are actually looking out for. You must set plans for yourself. What are the things you are trying to achieve, going into the market? Are you an investor? Are you a trader? Because no matter anything that goes up will definitely come down. So no matter how beautiful the market is, the time is going to come down, it's going to drop. And if you are not prepared for it, you will actually not even want to do anything with the stock market again. So educate yourself, have financial plan for yourself as well, so that you can be able to know what exactly you're trying to pursue. Of course, diversify. Don't just invest in maybe because the market is doing well. Diversify into different opportunities, especially for my investors that are on this call. I know who wants to invest in a space that is giving you 10% when you can literally get like 10 times, 20 times of the company you're investing in. But I normally advise, because I have a few of my clients that are also angel investors, and I usually advise them that as you are planning for that big deal, also ensure that you are protecting other front, right? So it's very important that you diversify. The last thing I'm going to mention is that ensure that you also have other parts of your life protected. So don't leave your retirement plan to the future. Don't leave your insurance. It's not a big deal, because you discover that days when you are not planning for ill health might be when you actually have to go for a certain surgery that you will spend huge money on. So don't just be carried away by the buzz of the market, but ensure that you are really, you diversify and you open your mind up for what is ahead of you.
Thank you. You've said so much, and like my brain is just going into so many different directions. the, the first thing that, like, the other question I want to ask you is, you say, be an investor, don't be a trader. What does that mean?
Okay. So for a trader will, for example, now, so I just made reference to Dangote Cement. A trader would just a trader requires to be, to have a sound understanding, or maybe not necessary. You might actually give it out to someone, but what you will be working with is what we call technical analysis. There are two ways by which you can analyze the stock market. Either you analyze the stock market through technical analysis or fundamental analysis. Technical analysis is when you are using, you're actually, analyzing the market based on some things like, the support, the resistance, moving average, the line trend, and everything. But when it comes to fundamental analysis, you go down into details. What is the profitability of this company? What is their debt ratio? What is their solvency ratio? You want to know who are the stakeholders, who are the managers? Are they just people that are full of sweet words that they cannot, make anything meaningful out of it? So for a trader is more concerned about technical analysis than fundamentals, because they are literally looking for how to make profit within a short time frame. But for an investor, you're like, I don't want to, I don't just want to enter the market and exit. I want to ensure that I invest my money in companies that have, potential, and of course, they have long-term use. I'm going to use the example of Coca-Cola. I always say to people that we have had quite a number of things about Coca-Cola. They will say, Coca-Cola can give you cancer. Coca-Cola can be used to flush toilets. I said I clocked 30 last year, and Coca-Cola has been in existence before I came to the world. And right now they are still here. That means they are getting something right. The management, they are getting something right, because I don't believe that it's the same people that have been managing the company in the past 30 years that are still doing the same. So for an investor wants to be looking at that kind of company that has, that people are going to use regardless of whatever economic downturn and all of that. And there are some others that they have actually come after Coca-Cola and they are no more. So as an investor, you are really careful about the kind of company you go into, not because of the immediate, but because of what you plan to gain in the future.
That's amazing. So what I'm taking away from this is, don't be a trader, buy and sell quickly, be an investor, understand the fundamentals of a company, and then pick the companies like that have been around for a while, solid fundamentals, good management, decent for profitability, etc. One thing that you hear often about, investment is risk and return, right? Like, can you shed a bit more light about risk and returns? And like, I know that low risk means, very little return, high risk, high return. How should investors balance risk and return when they're thinking about diversification?
Thank you. So I can actually bring light to risk and return from different perspectives, but I'm going to use two things that actually is very important that you take note when talking about risk. Number one is the fact that if you are going for an investment, just like you mentioned, the higher the risk, the higher the possibility of return. So if you are going for an investment that is giving you high return, you are simply saying that I'm up for the risk. And what does that simply mean? That's because there is something we call risk-free rates. That is, rates that are riskless, or investment that are a bit, let's call them riskless. Example of such would be things like treasury bills, because there's the common sense that when you borrow government, when you lend money to government, they should not run away with your money, except for a certain country where I saw that their president ran away when it was beyond him, and that's Sri Lanka. So it's a common sense, right, that when you give government your money, they will still be here, because Nigeria cannot run to Ghana. They will just find a way to, find a way around it, or at worst, print money to be able to pay you back their debt. So you are like, if you give so what's it called now? Federal government your money. You are not taking on any risk. So that's why we normally have the treasury bill at a very ridiculous rate. They only use it to control money circulation if they are trying to attract investors into the space. So if you are going to now, if somebody is now offering you rates like, oh, I'm going to give you 20%, I'm going to give you 30%, then you are already taking a level of risk, because at that level, they're not just keeping your money to be for keeping your money maybe in their wardrobe. They are using your money for a product, for an exchange of a product that might go well or that might go bad, right? So it's very important that you then now start asking, what level of risk am I taking if I go into certain investment? So we have low risk assets, we have mid risk assets, and we have high risk assets. The first one I mentioned, treasury bill, actually falls under the low risk asset. The mid risk asset is where we start talking about mutual funds, because when you're talking about mutual funds, I don't know whether I need to go into detail of that, but let me
No, you don't. You
know that.
don't. Well, like I think most people would have a decent idea of what that is.
An idea. All right. Okay. So when you're talking about mutual funds, you're literally saying instead of just investing in treasury bill alone, you are investing in a combination of different portfolio, different investment assets managed by fund managers. So at that level, you have taken a bit of risk, because it's not just one product you're investing in. You're investing in diversified products. Then we take it further, just started talking about stocks of companies. That means you are investing in a company and no longer fixed asset. Your return now is subject to the performance of the company that you are investing in. So if the company performs well, oh, success to all of you shareholders and investors. And the company fails, definitely that means you all fail, right? So that is the level of risk you take. Now, the second part of risk I want to talk about is in terms of your age, right? So when it comes to your age, what a 20-year-old person would take as risk is not what you would take as risk. Sorry, if a 40-year or 50-year-old person would take as risk, because that level, even we might consider maybe stock for a 20-year-old person as not too risky. Not all stocks are very, very risky. We have categories of risk also in stock. So let's say the person is going for mid-risk. We can still consider it as, okay, not so much of a risk because of their age. As they progress in life, they can afford to make some losses, and bounce back again. But for you, we are already 50 or going to retirement, even if that investment does not look like so much of a risk, because of your age, it has made it a thing of risk for you. So you have to now be very careful how you diversify your portfolio, so that you don't go ahead and put all your money in certain risky assets that if the markets have a retrace, you're not able to bounce back again. And then you end up, losing all your money. So when it comes to risk, it has to do with assets and it has to do with age. Thank you.
I love that. I love that. I'm just going to add here that angel investing is probably one of the riskiest asset class. And now I'm going to add that, the age factor is something that I haven't really thought about, but I've done my fair share of angel investing. And I believe that I'm young enough that I can make some losses. But like when I'm 40 or 50 or maybe 50 later, angel investing probably isn't something that I'll be doing because of just the risk level of it. Yeah. Now I'm just very conscious of time because people sent in questions. One last question for me is maybe two. Is like, what are the investment opportunities that people should look out for in 2024?
Honestly, I tell people that we have gone through several seasons of life. So we have gone through the gold age, we have gone through the oil, we have gone through the internet bubble. Right now, we are in AI technology and AI health, right? So if you are looking to position yourself for opportunities, I think I'm going to just say that the number one on my list will be AI, because we are not done. We are not done with that space. There are a lot of things that are still coming up. Tesla will never relent. I mean, Elon Musk will never relent. Always, dishing out new things. I will also about that this year again. But more than that is that we're also going to be seeing introduction of of flying vehicles, right? So what I'm going to advise is that for investors, just ensure that you follow the trend. I remember when I was researching, just like this kind of question you asked me last year was what I asked myself when I was trying to set up my client's portfolio. I was like, what is happening right now? What are people crazy about? Then I discovered that, okay, is this same AI? Then I went ahead. What stocks, are taking advantage of this space? As at that time, when I was actually setting up my client portfolio, people already had eyes on Nvidia, but it wasn't as much as it is right now. And quite a number of my clients, I set up their portfolio at the beginning of the year. I have a lot of testimonials. They come back and say, "Wow, Temi, my portfolio just did 50%, 100%," because it literally did 250% by the end of last year. So what am I saying? If you are looking at, there is a part of your portfolio, now I'm coming back to as an investor, there's a part of your portfolio that should be chasing trends in the market. There's a part of your portfolio that should be protecting your portfolio, protecting your entire fund. There's a part of your portfolio that should actually be generating you dividend. So don't just say, oh, because the next move is also AI, that you put your money in that space. But that is the space you want to look out for. You want to look out for AI, you want to look out for technology, health AI as well. Then when it comes to Nigerian space, you also want to look at oil, right? Because we are also not done in that space. There is opportunity, immense opportunity that also exists in that space. And of course, because it's something that, and has become a major source of revenue for some certain countries. So it's something that we haven't really gotten a better alternative to. Although there are solar, there are all of those things being introduced, but we are not done. So I would say that those two things, the technological space and of course oil, there are two main places where what I'm looking out for in terms of investment for 2024.
I love it. One last question before I go to the audience question. And also for people who are here, if you have a question that you want to ask, I'm going to open the comments so that you can just add it in the chat. So any questions, just put it up in the chat and we will take it. So Dr. Temi, you've talked about a lot of things. Now let's talk about your personal experience when it comes to diversification. Now we'll talk about the good and also the bad, right? Like how have you navigated that so far? And yeah, I'm keen to hear your personal experience to date.
All right. So when it comes to diversification, I think for me also, probably because, coming into Money Africa, I discovered I was coming from a market perspective where you actually get to do more of trading than investing. When I came into Money Africa, I discovered that the best approach to actually maintaining your portfolio is to be a conservative investor. Yes, because I've had clients that will say to me, I want to be aggressive. Is it possible like I get like 60% of my portfolio per annum? Okay, we are in for something. So one thing I've discovered is if you are conservative simply means that you're not putting all your money into stocks. So if I'm setting up an 100% portfolio, either for myself or for my clients, what I do is to ensure that at least 20 to 30, also depending on your age, 10 to 30% is going into cash and cash equivalent. So that either is taking care of your emergency fund. A lot of people want to start investing. They don't even have they don't even have money called emergency fund. And what is emergency fund? Just like that emergency is simply something that you didn't plan for. So you should have money that will take care of you for an unplanned situation, like 3 months, 4 months. Nobody expected that what happened during COVID-19 was going to take that long. A lot of people lost their job because they were not prepared for it. So the best way you can ensure that you're able to maximize your portfolio and protect it is first to have a portion go into cash and cash equivalent asset so that you can quickly, convert it into cash if need be. Because as a matter of fact, Nigeria was the only stock market that did 50% during COVID-19. It's amazing. S&P 500 actually did negative 20%. So what that means is that a lot of people's portfolio was in red. They were in red. So you can imagine if all that you have is in the market, then that means you will have nothing to actually fall back on, or you actually sell at loss. So let it be about 20-30% of your portfolio for cash and cash equivalent asset. They said cash is king in that situation. Then about 30, maybe another 20 to 30 or 40, depending on your person again, go into mid-risk asset. This is where we start talking about mutual funds, we start talking about bonds, we start talking about real estate investment trust, right? Then the last percentage, let's say around 60% or 50%, can go into stock market or just like you mentioned, alternative assets that are a bit risky. But of course, you're going to diversify in that space too. So you want to take out, I didn't mention that crypto is something that we should look out for in 2024 as well, because of number one, the Bitcoin ETF that was approved by FedSec, and also the halving that is going to happen in April. So those two things are major factor in the crypto space, right? So you want to have, as a young investor, you want to have some portion that you could just push into that space. Now let me talk about the good side of me. I've actually been, a beneficiary of crypto very well in 2021, I think, where I invested because I as my profession, I also need to also take a level of some risk so that I'll be able to give good advice to my client. So at some point, I bought certain coin with just $10. That was when we still had initial coin offering, when not everyone really knew about what that really means, So I took advantage of that. And I'm being honest with you. I pulled out of the market at $1,000. Then I did another one with $50. I pulled out of the market at $800. So all I'm literally saying, and of course I've had others too that didn't go well. But if you notice the amounts I'm calling, they are ridiculous amounts. That in case the market goes south, I will have to go and start life all over again. So the strategy I'm just going to leave you with is that ensure that you diversify your portfolio from low risk to mid risk to high risk, because this whole thing is a game of risk, so that if your investment does not go well in one, you are able to bounce back as early as possible. Thank you.
It sounds like the perfect case of don't put all your eggs in one basket, right?
Don't do that.
Don't do that. Okay, great. So we have a question from the audience, and it's how do you factor or manage currency risk when investing in local currencies such as Naira? Is investor behavior contributing to the problem?
Sorry, come again with that question, please.
So how do you manage currency risk when investing in local currencies such as Nigeria? We've seen, such as Naira, we've seen a Naira go the other side in the past maybe 18 months. And the second part of the question is investor behavior contributing to the problem?
All right. So for the currency risk, Nigeria does not have hedging, they don't have hedging instruments like developed countries have it, So what I normally tell my client, especially for you as a retail investor, because a lot of time we are not HNIs, like the banks that can afford to put down millions of naira down, to invest in to build certain portfolio. I feel that people that are on this call also want to maybe they want to diversify their investment to different opportunities. So what I would just advise you is that if you are looking at investing in the Nigerian space, then it is very important that you diversify. So that's what I do for my clients. We ensure that we don't just put all your money in naira. As a matter of fact, I tell them, any money you are going to need at retirement or you're going to need in 10 years' time, let it not be in naira. It's best that it's
let it not be in naira, no naira.
Yes.
Oh,
yes.
wow.
The exchange rates, the currency devaluation last year was actually negative 55%. What does that mean? Even if your portfolio has, in naira generated 50%, which is very, your entire portfolio generated 50%, which is very, very low. The probability is very, very low. You have still lost 5% because of the exchange rate difference. So when I talk to my clients, I make them understand that. See, you cannot compare the Nigerian market. Yes, you are doing well. I shared the good news at the beginning, but you can't still compare the Nigerian market with the US market. The Nigerian market does not even contribute up to 20% to the GDP. So that means that if anything goes south with the Nigerian market itself, it may not really rub on the Nigerian economy. But it's not the same situation with US that is his own stock market is contributing about 190% to his GDP. If anything happened to Apple actually is the biggest market in US. It has $3 trillion cap. If anything happened to Apple, hey, US will feel it. I don't know maybe what I'm trying to paint you understand. So you want to put your money in a place where it's really regulated, where the government are so concerned about the health of the market, and not just using politics to direct things. So in your best interest, if you are investing money towards the long term, it's best that is in strong currency like dollar. And for your other category of assets, you can maybe the ones you need to attain certain goal. I want to maybe buy something in the next 3 years, investing for my child education in the next few years. All of those short-term goals, your money can be in Naira. That's the best way to go about it. Then for the second one, about does investors' behavior, does it contribute to what is happening? Is it in the market? Sorry, I think you are muted.
Yes. The question is investor behavior contributing to the problem? And that problem is, currency devaluation.
All right. So yeah, of course, because I think one thing that the Nigerian government is trying to do now, although I'm seeing it as a way of possibly it might be a strategy to manipulate the market, is that they said they're now going to give what's it called now, BDC, the right to also publish their own rates. So I'm asking myself, who is going to, if you are giving me this kind of good gesture, then I'm not going to act against you. There must be something in the background that we don't know about. So, Nigerian is just a very wonderful space that, at the end of the day, you even ask questions that you don't get answers to, because when they want to play the market, they have their own wise way of doing it. A lot of time last year, we've heard, okay, they've gotten this loan. They used to shock our external reserve that has been down. And then discover that you're not really seeing anything, that it's just hot news and buzz. So my process is just to ensure that you think for yourself and don't be emotional about your investment. Don't let anybody talk you down and say you're not doing anything for Nigeria. Come on, put your money in the space. When all is said and done, just like I was telling somebody on LinkedIn, that the small, the retail investors, you'll still be the ones to get the most hits of everything happening in the market.
Thank you. I'm gonna go back to the questions that we have here. We have I have two more questions. The last one is a very short one. The first one is, what do you think about investing in a high value property for your first real estate investment? For example, investing in a 250 million flat in Ikoyi.
Yeah, so when I first saw that question, I was like, this is a space I don't like to talk about. So that I don't rub my sentiments on you. But these are my stand about the real estate market. Number one, so we did an analysis in the companies, I think in 2022. Somebody somewhere bought, I'm just giving this analysis again. So somebody somewhere bought, invested in real estate, let's say in the US, bought it for, let's say 120 million naira in Nigeria. I mean, when converted, it was around $200,000. When he wanted to sell the house has even lost value. So he's now selling it at around maybe 190. That's a loss of $10,000. But when the money was converted back to Naira, the person should just come back to Nigeria to be crowned as king. Because it was, years back when it was converted to Naira, it was literally giving so good vibe. So if you are a first-time investor, you want to invest in that kind of, so you have 250 million Naira and you are thinking, let me invest in that kind of space, you must understand that you are like standing a risk of putting all your money in one basket, which is very risky. Also for the fact that is a big investment, not everybody can afford that. So it cannot be easily liquidated. If at some point you need to sell that off, I have some of my clients now since the beginning of last year, they have been trying to sell their land and it's impossible. So you putting your money alone in that space is more like you are not diversifying. But of course, the good part is, if you are lucky enough that you find it in a place, maybe like somewhere close to where industry improvements or something is happening, you can also be on a good catch for some good money. But then also remember the power of inflation and the power of exchange rate volatility. But if I were you, I'm not going to put all my 250 million naira down just in one asset. I would rather look for how, and of course, there are other opportunities here right now in Nigeria in terms of shortlets and lease rentals. How about, taking part of that money to set something like that up so that you are able to invest in something that is giving you monthly or yearly return rather than just waiting for somebody to come and buy the asset for you that may never come as early as you can imagine. So that would be my standpoint on that.
Thank you. Now, the last question, which is also a very nice way to close the conversation. Somebody, or her name is Joy, she wants to know, how do we enlist Dr. Adeyemi's portfolio management services?
All right. So literally, we have about 4 financial advisors in Money Africa. So just like I mentioned at the introduction, that's one thing people be like, Tosi, thank you for setting this up. But honestly, I'm not sure I'm confident enough to still want to go this journey myself. So that's why we have at Money Africa, we hold financial advisory sessions with people. We literally help you we sit with you, we plan with you, right? And not just like I said, we are not traders. So we help you sit down. If I was even looking into your spending habits, we try to discover what are your triggers, what are the things that are actually taking money from you. They want to know about your income level. Are you doing well enough to be able to generate enough income that will be sustainable for you at retirement? So that is what we do during our 1-hour session when you come to us for financial advisory. Then we help you set up your portfolio so that you are able to invest into different opportunities. We recommend certain platforms to you that you need. Of course, necessary account that you might need to open, just like having your own CSCS account in case you need to invest in the Nigerian space. We help you do that as well. And of course, you also have access to your financial advisor. Anytime you see opportunities and you want to run it through your financial advisor, what do you think about this? We have that opened as well. So at Money Africa, we have such options for you. It just depends on what angle you are coming from. Either you are coming in as a premium client or as a platinum client.
Okay, I think what we'll do is, as part of the feedback session, we will add all things about Money Africa and how people can get in touch with you, and I will be able to share that. Dr. Temilola, this has been amazing. I've learned quite a bit, and I'd like to thank you for your time today. I hope that people who joined the call also learned a thing or two from it, and we would like to thank you for joining. So yeah, thank you, Dr. Temilola.
Thank you so much, everyone. It's been a great time talking to you. And literally, I was also looking forward to, maybe getting a brief again, of what HA. I know you already sent it to me, but I really wanted it to be that maybe 1 or 2 persons going to say something about how it has been, being part of the community. Because literally, like I said, you are the future of Nigeria. Another thing I didn't talk about is the fact that FDI has been down for a very long time. And when you look at the private space, I mean, in terms of money being pumped into the economy from the private space, that has been actually on the rise side. So that simply means that we have hope. You are the ones that are actually going to remedy the whole situation happening in Nigeria. And I love it when I'm actually among investors that are very passionate about investing in different space. Thank you so much for having me.
Thank you, Dr. Temilola. I think I hope we want to back great founders who are building great things for the